Canadian banks have been raising mortgage rates recently. Those looking for a new mortgage or renewing an existing one have to decide if now is the time to capitalize on rates and lock in, or to wait and see if this is just a blip.
If you're in the market for a new mortgage, then you already know. Interest rates are inching up. The Royal Bank has raised mortgage rates twice in the last month, and other big banks are following suit. The increases aren't huge, with rates staying between 3 and 5%, depending on the length of the fixed-term mortgage.
It's been about 2 years where rates have generally stayed pretty stagnant. So it was just a matter of time that they would start to float upwards, given that the economy is performing better.
Before the financial crisis in 2008, rates around 6% were seen as ideal, so these figures are still historically low.
For a long time, mortgage rates were around 6% or so, and because I can remember years ago living in Edmonton, when mortgage rates essentially went from about 8% to about 16%.
It can still come as a shock for those accustomed to the low rates. Now many are facing the question of whether to lock in on these rates in the event they increase, or wait it out and see if they drop.
If you sort of know what your situation or personal situation is going to look like for the next 5-year window, and you're not comfortable with taking the risk on the variable rate side, then definitely now is a good time to lock in, given where the rates are.
RBC says forecasts show rates will continue to climb as the U.S. economy regains its footing. Others say if you have a low variable rate, don't commit to a fixed-term figure.
Leave it as it is. Nothing that indicates rates are going to go up. This is just a little blip that we've had here in the last little while.
Quinlan doesn't see anything in the next few years that indicates rates will continue to climb.
I see that we're going to have slow to little growth. The U.S. is already committed to providing more incentives, buying down interest rates. I don't see any reason for interest rates to be going up, because it has to be driven by more economic improvements.
Economists say the higher interest rates are a good indicator of a strong economy, and signs point to continued growth.
They will go up. It's just a question of how much and how long it's going to take.
The decision for those signing on the dotted line comes down to what they think the economy will do in the coming years, if they want to pay for the security of a fixed-term rate or take a gamble on a variable. Kelly Linehan, CKPG News.